Thank you, Mr. Secretary. I'm going to start with a couple of questions here, and hopefully the chairman will return soon, and I will use 5-minute rounds and see where it goes from there. I'm particularly concerned about the administration's proposal to raise the capital gains tax and apply the tax when an asset is transferred at death or by gift, not when the asset is sold, as is the case today. That proposal, if enacted, would have a devastating impact on family farms and small businesses in my state of South Dakota. And I want to give you an example. According to the South Dakota State University Agricultural Land Survey published last year, land values in South Dakota have more than doubled since 2010 and gone up 7 times since 2000. So if you take a typical family farm in South Dakota that bought a section of land, which would be 640 acres back in 2000 for $640,000, which would have been roughly the price at that time in certain areas of my state. And I would note that in South Dakota that would be considered a small farm. Today that same farmland is probably worth somewhere between $3.5 and $4.5 million, depending on where it's located. So under the current estate tax law, which excludes assets up to $5.43 million, that family farm isn't taxed when it passes from one generation to the next. Now, under the administration's proposal, that family farm would be hit with a significant tax when it's transferred from to the next generation of family members. Now, your proposal, as I understand it, exempts $100,000 in capital gains or $200,000 per couple, and raises the gains rate to 28%. So in that example, this South Dakota family would suddenly find themselves facing a tax bill of $1 million or more. So most farms of this size would not have liquid assets to deal with that large of a tax bill, meaning the only way that they'd be able to pay Uncle Sam would be to break up the family farm and sell off portions of it. So I know, you know, Mr. President, that the President likes to talk about loopholes and trust funds and the like, but this capital gains proposal that you all put forward, you really need to talk clearly about what it would do. It is a very punitive death tax on America's family farms and family businesses, especially in places like South Dakota, where we've seen significant price appreciation for land. So the question, Mr. Secretary, very simply is, what is the administration's intent with regard to this tax? If it's to break up family farms, obviously it's going to have that effect, or is it simply an unintended consequence of your interest in imposing yet another layer of taxation at death, which I think, again, would be very unfortunate?
Senator, let me step back and go to the reason for stepped-up basis and then get to the specific question about farms. You know, stepped-up basis is really meant to make our system work in a way that's more fair. Right now, if any of us take savings in 401ks or IRAs for our retirement, we need to realize the income and pay income tax on that. For families that are able to accrue enormous fortunes that never need to realize the income, they're able to pass on in stocks and bonds and other assets without any taxes paid the appreciated value. Stepped-up basis would treat those families the same as it treats all of us in middle-class families. We were very concerned that it not have an impact that was unintended on small businesses and family farms. So we do have exemptions that apply for the first $100,000 for an individual, $200,000 for a couple. We also have an exemption that applies if there's a modest income, and we also have provided 15 years for the payment of any of the capital gains so that it wouldn't require a forced sale. And we would look forward to working with you and the committee on trying to refine in any way we could to make this proposal, which we think is fundamentally fair, something that works well.
Well, I guess the way that I look at this, I mean, these are non-liquid assets. These are not like somebody that's selling stocks or bonds. You're talking about, you know, these are, farmers tend to be land rich and cash poor. And you're talking about shifting the point, the time the gain is realized. You're talking about raising the rate. And you're talking about it's just a huge tax liability for a lot of people who, at a time when you want to see some of these assets transfer to the next generation, if you want to maintain family farming and ranching operations, most of those require intergenerational transfers. I mean, that's how we keep that economy sustainable in states like South Dakota. And it strikes me, at least, that this is just a very, very punitive tax on family farms and small businesses.
Senator, I would just say on the capital gains rate, what we've proposed is returning to the capital gains rate that was in effect under President Reagan at a time when we went through a period of economic growth with that capital gains rate. So I don't think the capital gains rate is something that is an untested one. In terms of the impact on illiquid assets, we designed it so that it wouldn't require a forced sale, and we would look forward to working with you to deal with issues that arise in the design of a provision.
Even if the rate goes back to the 28% rate, which it was before, I mean, you're still talking about shifting the time at which the gain is realized and hitting people. Essentially, I mean, it's a death tax. You know, normally for a gain to be realized, somebody has to sell the asset. In this case, that doesn't happen. I mean, this just seems like a really strange proposal, particularly if you represent a constituency like I do in a farm part of the country. So,
I mean, the problem with stepped-up basis under current law is that gains go untaxed forever in many cases, and I don't think that that's something that we would design the tax law to do. You know, if you were talking about stocks and bonds and not a family farm, it would be very hard to defend having tens of millions of dollars of gains that effectively go untaxed from generation to generation. I understand the issue in terms of illiquid assets. We did put in the 15-year term to make it something that for a working farm or a working business would be something that could be managed in the normal conduct of the business. I would just point out that in the case of the estate tax, you know, CBO did a study that concluded that only 65 farms in a given year would have been subject to the estate tax. So I think a lot of the concerns about the imposition of burden have been out of line with the actual impact. And if there are issues here that we need to fine-tune, we would look forward to working together.
yeah. Well, again, you've got a triple shot. You've got an increase in the rate, you have a change in the time of realization, and you do away with step-up basis all at the same time. And again, I mean, these are pretty dramatic changes, and I understand what you're getting at under a normal circumstance to try and ensure that like transactions are taxed in a like manner. But we've always treated farmland and assets that are transferred at death in a very different way. Anyway, my time's expired. Senator Wyden.